Hey Bowtie Nation, Joseph Hogue here, updating the most popular investing idea on the channel. A portfolio of just 12 dividend stocks that will put cash in your pocket every single week. More than 500,000 investors watched as I turned 12 earlier stocks into weekly cash payouts. But where those dividend stocks paid an average of just 5%, the dividend stocks I'll show you today beat that by 40%. A dividend yield of 7% on your money. In this video, I'll show you how to create a weekly dividend stock portfolio, how to find when a stock pays its dividends, and how to pick the best. I'll then reveal those 12 best dividend stocks to buy for cash flow every single week. Better still, for the first time, I'm including 4 monthly dividend payers on the list, which means you're going to get double dividends every week. Stick around because towards the end of the video, I'll also show you exactly how much to invest to make $100, $200, and more every week. How this works, I found 12 dividend stocks that pay out in different weeks every 3 months. For example, our first stock, Cisco Systems, pays out in the first week of January, April, July, and October. Another on the list, the JP Morgan Equity Income ETF, is going to pay out in the first week of February, May, August, and November. So then putting all these stocks together strategically in a portfolio makes sure that you're never more than a week away from a dividend payment. Let's get started with Cisco Systems, ticker CSCO, but stick around and I'll show you exactly how to set this up and change out the stocks for a higher yield. Because I know that 2.6% dividend on Cisco isn't anything to get excited about. In fact, I had to squint just to see it, but what the company does provide is a solid 7.9% annualized return and potentially even more upside on that AI data center build-out. That's because Cisco could find new growth in not only its trademark routers and connectivity solutions, which are critical in a data center, but also it's remaking itself across cloud, software, and security. What I really like here is the $24 billion in recurring revenue on its products and services, sales the company can count on every year, helping to grow that dividend. You see here, Cisco goes ex-dividend in the first week of January, April, July, and October, with a dividend that has grown at a 2% annual pace over the last 5 years. And I think that 8% annualized return with a 2.6% yield is really the base case here, with the upside into double-digit returns. Our first monthly dividend stock is one of my favorites, Pennant Park Investment, ticker PNNT, with its 13.8% dividend. Pennant Park is a business development corporation, a BDC, which makes loans and takes equity in mid-sized businesses. It's more broadly focused across the capital structure than a lot of other BDCs we've looked at. While 58% of the debt here isn't first lien secured, it's a little riskier portfolio with 22% equity and 13% subordinated debt. So then that additional risk feeds into the higher dividend yield and will generally mean a higher price return when times are good. And while the dividend has been cut a few times over the last few years, the stock has still managed to produce that 13.4% annual return, which is great to see in these high-yield names. And again, as a monthly payer, it's going to make sure that you're never too far from a dividend, going ex-dividend in the second week of the month. We've still got 10 more dividend stocks in our list for that weekly cash flow, but investing means staying on top of the news. And for that, I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, trends, and the strategies you need. It's absolutely free, just something I like to do for all you out there in the community, so look for that sign-up link in the video description below. Natural gas could be getting a kick with higher LNG exports, and EOG Resources, ticker EOG, is going to be right there with its 3% dividend. EOG is one of the largest natural gas producers with operations across the United States. While the company does produce some oil, natural gas production of 10,000 barrels a day equivalent, or about 85% of its total volume, makes this one almost a pure play on gas. Nat gas prices crumbled last year, but a drop in production by some companies, including EOG, have right-sized inventory and prices are back up again. And within all this, EOG is also working to become more efficient, having its costs for a 10% ROE on oil and bringing it down to just $2.50 per million BTU on gas. That's helped it to increase cash flow even more on those lower prices and sustain the dividend. These shares go ex-dividend in the third week of that January, April, July, and October schedule. And even with the industry problems, dividend growth and total return have been outstanding here. With an increase in LNG exports to Europe expected over the next few years, this is going to be one to own. We've got one of my longest holding dividend stocks next, but I want to make sure you know how I found these and how to use this strategy to create that weekly dividend list. This all starts with the fact that most dividend stocks pay out each year on extremely consistent schedules. Dividend investors love that certainty and the consistency, so directors of these companies try to declare and pay those dividends on the same week every 3 months some even down to the same day. So here, you can put together a list of your top dividend stocks, or do like I did and research all 360 stocks in the S&P 500 that pay a dividend. You then go to a site like Yahoo Finance, you go to the stock and click through to the Historical Data tab. Now I can change the time period to the last 5 years, and then to show dividends only, and click apply. And here the site is going to show me the ex-dividend date for every dividend payment on the stock over the last 5 years. And you can see these are consistently the same time during the same months. For example, AT&T consistently has that dividend date towards the end of the first week in January, April, July, and October. And that's going to be paid out about a week or so after that ex-dividend date listed. Then it's all just a matter of getting all this into a spreadsheet like I did here, noting when each stock goes ex-dividend. Once you have that list of dividend stocks, you can plan it out like we're doing here with this portfolio. You pick your dividend stocks according to which are going to provide payments in those different months and the weeks. Wrapping up our first group here is Enterprise Products Partners, ticker EPD, with its high 6.4% dividend yield. EPD is a fully integrated midstream company, meaning it has exposure to everything between the explorers and retailers, including 50,000 miles of pipeline storage, gas processing, and chemicals. It's more diversified than most midstream energy companies and has the financial weight to leverage size for those higher returns. Returns on invested capital has remained above 13%, even in the worst collapse in oil prices, so you've got a dividend stock that you won't have to worry about. The stock goes ex-dividend in those last few days of the month, meaning anyone holding the shares that day is going to get the dividend when it's distributed. Now here, dividend growth hasn't set the world on fire at just 3% a year over the last 5, but this is a high-yield stock with upside price return as well for a total return of over 13% a year. EPD has one of the strongest histories of dividend increases in the MLP space and recently made the champions list with its 25th consecutive year of increasing the payout. Starting this next group of stocks is another monthly pair, probably my favorite right now, the JP Morgan Nasdaq Equity Premium ETF, the JEPQ, with its 9.7% dividend and double-digit price return. Similar to the QYLD that focuses on the Nasdaq 100 index, but with the expertise of JP Morgan managers that we see in the JEPI fund, this one has produced a 15% annualized return over the fund's life. With the stock going ex-dividend in the first week, you can already see how we're adding these monthly payers to give you double the dividends. Now I've got 4 monthly dividend stocks in the list that are going to put cash in your pocket every week. Then you get another dividend from the rest of the list. We're just getting started, but I want to get your input on this as well. I ranked the 7 most popular dividend ETFs last week, including that JEPQ dividend machine. Now, I love ETFs for their instant diversification and a sleep-at-night portfolio, but the payouts are usually lower. Which do you prefer, though? Now, I'm going to leave a link to that other video below, but let me know in the comments, which do you like better, the ETFs or the dividend stocks, and why? Utility stocks are some of the most dependable dividend payers, and we've highlighted Black Hills Corporation, ticker BKH, a few times lately. Black Hills is a regulated utility serving 1.3 million customers across the Midwest in electric and natural gas. And what was once a low or no-growth industry is now booming with the demand from data centers. BKH expects new data center demand to add 5% growth to the current earnings and up to 10% by 2028. That's why I am giving it a pass on that negative total return over the last 5 years. Utilities, along with real estate, were really slammed on the Fed's increase in interest rates and are now just starting to recover. Now that AI energy consumption should help it supercharge its dividend growth, already growing at almost 4% a year and having grown the payout by 54 straight years. Black Hills is a dividend king, with the stock going ex-dividend like clockwork in the second week of the February, May, August, and November schedule. That dependability is there, and now the growth is contributing to a 31% pop in the stock, paying nearly a 3% yield here. Shares of Target, ticker TGT, with a value play on a solid dividend grower. While Walmart had a blowout year last year, shares of Target just flatlined, but still have an undeniable brand in the industry. Growth in the beauty segment and nearly 11% annual growth in its digital revenue are helping to keep that overall sales positive. And here the stock is trading for under 15 times on a price-to-earnings basis, a discount of 17% on the average valuation over the last 4 quarters. With real weakness at the dollar stores, Target has an opportunity to take market share along with Walmart, and even in its recent sales environment, has been able to grow the dividend by 11% a year over the past 5. Next, we've got another monthly dividend with the Simplified Volatility Premium ETF, ticker SVOL, and its 16.7% dividend, the highest on the list. This fund strategy is different from the stocks and the stock funds we usually talk about. The SVOL shorts volatility futures contracts, a way of capturing that fear premium in the market, and then produces a cash flow without betting on the stock's direction. That strategy is backed up by research, testing VIX futures shorting from 2005 through 2015, rolling the short contract over each month was profitable in 8 of the 11 years, with an average monthly return of 0.7% and a total return of 118% over the period. And now we can see while the strategy did break down briefly on that faster than expected rate increases by the Fed, it still managed to produce an 8% annualized return over the last 5 years. Now that the Fed is done raising rates, we should see a higher return with the dividend yield and little or no price downside. We've still got some of the highest yielding stocks in our dividend stocks portfolio next, but I want to give you some of the criteria here for picking these stocks. With more than 350 dividend stocks in the S&P 500 alone, you're going to have plenty to choose from to create your weekly cash flow. So here you can be picky, only buying the very best dividend stocks for yield and return. And a big part of that is recognizing that it's not just about dividend yield. If 42% of the total return on stocks is from dividends, that means another 58% has been from price returns. Just chasing that highest dividend yields and ignoring the other returns means you're missing out on a big part of investing. You can get technical here and calculate the returns like we've been doing, or you can just go easy and just check out the price chart to make sure that the stock is producing those positive returns. For example, with shares of Crown Castle, you can see that not only do you get that dividend yield just under 3%, but the stock has jumped 60% in the last 5 years, an additional 10% annual return. And we talk a lot about those fundamentals and the analysis of dividend stocks on the channel, like the payout ratio and earnings growth. I'm going to link to some of those videos in the description to detail that, but another easy check is just to go to the dividend history on a stock, select the last 5-year period, and just make sure the dividends have increased. That's it, just 2 steps to make sure you're getting a return on your money and more cash in your pocket every single year. We're into our March, June, September, and December payouts now with Regions Financial, ticker RF, and its 4.1% yield going ex-dividend in the first week. Higher interest rates destroyed the bond portfolios held by the banks, as well as the commercial real estate they lend on, but Regions has still managed to produce a 14% annualized return over the past 5 years, and that's all before the shift to those lower rates and deregulation that could push those banks higher. For its part, Regions has just 14% of its total loans in commercial real estate, or about $14 billion of the $98 billion portfolio, which is much lower than the 60 or 70% that we saw in some of those troubled banks like NYCB. That means Regions wasn't hit quite as hard in the crisis, but just the overall negative sentiment in regional banks doesn't mean the shares just stagnated and are trading at a very good valuation. Another stock I've been following for a while here, Crown Castle, ticker CCI, got hit along with all things real estate on those higher interest rates, but is now heading on up and is in a strong industry for growth, with more than 40,000 cell towers and 85,000 miles of fiber optics cable. Mobile data usage continues to grow, meaning growth in that demand for towers. Mobile data demand is expected to grow 21% through 2027. So that drop in the shares in 2022 was purely an interest rate story, those higher rates sinking property values for higher leveraged real estate stocks. But now as rates do eventually come down, we could see those shares bounce back higher. The shares are sending that dividend your way in the second week of the month, a high yield of almost 7% and a 5.5% annual dividend growth over the last 5 years. Here we've got our 4th monthly dividend stock with Gladstone Capital, ticker GLAD, with its nearly 8% dividend and the second highest total return of the group. With the dividend and the price return, shares have produced an 18% annualized return for investors. Gladstone reports loans across 12 industries, which is actually not as diversified as most, so maybe a little riskier than other BDCs, but the company has been able to manage that risk for a great return. Going ex-dividend in the 3rd week of the month, plus a special dividend paid out in December, it's one of my favorite monthly payers. Here, WP Carey, ticker WPC, is another real estate stock hit hard by that interest rate story, but it's my favorite REIT for diversification. WPC is a $13 billion real estate investment trust with almost 1,300 properties across 170 million square feet. And the reason this makes so many on my list is that diversification. First, the company's real estate is spread across multiple property types. About a third of the rents come from industrial properties, with another third from warehouses, but then you've got 21% from retail and another 15% from those other property types. So a crisis in any one type isn't going to kill the company. WPC is also the most geographically diversified REIT I've seen, with a full third of its rents from properties in Europe to really smooth out that focus on U.S. real estate. So again, it's this diversification across property type and location that makes WPC one of my favorite REITs, really reducing your risk in real estate, but keeping that high cash flow potential. The company collects over $1 billion in rent and books 98% occupancy, over 172 million square feet of rentable space, and with interest rates finally coming down, that could support property values and push the stock price higher. Here is the entire list of dividend stocks, 12 stocks that are going to produce a dividend check every week of the year. In fact, with those 4 monthly payers, you're going to be getting 2 dividend payments every week. Best yet, this dividend portfolio is going to produce a 7% cash payment. Now, by far, the most asked question I've gotten on that last video was, how much do I need to invest to make that $100 or $200 a week? So I wanted to show you exactly how much to invest for that weekly cash flow. And this is actually pretty easy to find that amount you need to invest. I'm going to show you here and then walk through an example. First, if you know the cash flow you want each week, you can divide that by the dividend yield on the stock. Then you multiply that number by times you need it. So for weekly cash flows, times 52 weeks, or for monthly cash flows, times 12. I know all the numbers can be confusing, so let's do an example here. Let's start with $50 and then divide that by the dividend yield. You can do that for an individual stock, or we'll use the portfolio average of our 12 stocks of 7% dividends. So $50 divided by 0.07 gives us $714 we need to invest. But now that dividend yield is always shown as an annual percentage. So if we want to make that much every week, we have to times that by 52 weeks in the year. Now that means that 7% dividend yield, we would need to invest just over $37,000 in stocks of this portfolio to earn that $50 a week. And you can do this for those other amounts as well. An investment of $74,000 across the portfolio, say in about $6,000 in each stock, would pay an average of $100 a week. Now I understand that kind of sucks because it's out of reach for a lot of people, but don't forget that doesn't include the price return. That 10% annual return in stocks like EOG goes a long way to growing your portfolio and the dividend cash flow. Get the Bowtie Weekly free with the special invite link in the description below, and always stay up to date with the stock market news, strategies, and trends you need. Or click on the video to the right to see those 7 dividend ETFs ranked from highest yield. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.